Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we will begin with Accounting Chapter 9, that is Not for Profit Organization. Let us begin. This is Lecture 1. Let us begin with the learning outcomes. After studying this chapter, you will be able to understand the meaning of not for profit organizations and distinction between a profit making organization and a not for profit making organization. You'll learn the accounting for not for profit making organizations, understand the meaning of receipts and payments account and income and expenditure account, and see the distinction between the two accounts. Learn the technique of preparing receipts and payment account. Identify main sources of income and learn the techniques of preparing income and expenditure account and receipts and payment account. Learn the technique of preparing balance sheet for not-for-profit organizations. Overview of the chapter. Financial statements of not-for-profit organizations include receipts and payment account, which is equivalent to cash book, income and expenditure account, which is equivalent to profit and loss account, and balance sheet, that is statement of financial position. Donations, entrance and admission fees, subscription, life membership fee are some of the sources of income for the not-for-profit organizations. These items have separate treatments, some being capitalized while others are treated on actual basis. Introduction. A not-for-profit organization is a legal and accounting entity that is operated for a benefit of the society as a whole, rather than for the benefit of sole proprietor or a group of partners or shareholders. Non-profit making organizations such as public hospitals, public educational institutions, clubs, temples, churches conventionally prepare receipts and payment account and income and expenditure account to show the periodic performance and the balance sheet to show the financial position at the end of the period. In this chapter, we shall discuss the techniques of preparing receipts and payment account, income and expenditure account, and balance sheet for not-for-profit organizations. Also, we shall discuss and illustrate the technique of preparing income and expenditure account from receipts and payment account. It may be mentioned that the income and expenditure account is just similar to profit and loss account prepared for the profit making organizations. In case of income and expenditure account, the excess of expenditure over income is treated as deficit. In non-profit making organizations, such cash receipts and total cash payment are highlighted through receipts and payments account. I believe you understood. In not-for-profit organizations, instead of preparing cash account, we'll be preparing receipts and payments account, and instead of preparing profit and loss account, we'll be preparing income and expenditure account. Nature of receipts and payments account. A receipts and payment account is a summary of cash book without date column. It is an elementary form of account commonly adopted by not-for-profit making concerns such as hospitals, clubs, societies, temples, churches, etc. for presenting periodically the result of their working. It consists of a classified summary of cash and bank receipts and payment over a certain period together with the cash payments at the beginning and the close of the period. The receipts are entered on the left hand side and the payment on the right hand side. That is, same sides are those on which they appear in the cash book. Features: it is a summary of cash and bank transactions like cash book. All the receipts, that is capital receipt or revenue receipts, are debited, and similarly all the expenditure, that is capital expenditure and revenue expenditure, are credited. Next, it starts with opening cash and bank balances and also ends with their closing balances. Next, this account is usually not a part of double entry system. It includes all cash and bank receipts and payment, whether they are related to current, past, or future periods. Surplus or deficit for an accounting period cannot be ascertained from this account since it shows only cash positions and excludes all non-cash items. Let us begin with illustration 1. The receipts and payments for Swaraj Club for the year ended 31st March 2016 were: entrance fee 300, membership fee 3000, donation of club for club pavilion 10,000, foodstuff sale 1200, salaries and wages 1200, purchase of foodstuff 800, construction of club pavilion 11,000, general expenses 600, rent and taxes 400, bank charges 160. Cash in hand on 1st April is 200 and 31st March is 350. Cash at bank 1st April 400, on 31st March it is 590. You are required to prepare receipts and payment account. Let us begin. Solution: Swaraj Club receipts and payments account for the year ended 31st March 2016. Particulars amount, we can also write receipts and payments. Better we should write receipts and payments. To balance brought down 200 cash balance and bank balance 400 opening balance. Right, to balance brought down, this is opening balance of cash and bank. income in terms of entrance fees, entrance fees 300, membership fees in sports club, membership fee 3000, donation received donation for club pavilion 10,000, sales of food stuff 1200. It is income. Payments in terms of salaries by salaries and wages 1200, by purchase of foodstuff 800, by club pavilion expenditure on its construction 11,000, by general expenses 600, by rent and taxes 400, by bank charges 160, by balance carried down closing balance cash in hand, cash at bank 350, 590. 15,100. Let us continue. Limitations of receipts and payment account. From the study of the above account, it will be apparent that the increase in cash and increase in bank balances at the end of the year as compared to those in the beginning does not truly represent the surplus for the year, since it does not take into account the cost of construction of the pavilion, which is in excess of the donation received. The donation received was 10,000 and the cost of construction of pavilion was 11,000. The outstanding subscription or those which were collected in advance, etc. Ordinarily, one must ascertain whether for the current year income is sufficient to meet the current expenses or not, since the receipts and payment account includes items to all the periods, previous period, future period, and current period, or all the types, revenue and capital. It does not serve any purpose mentioned above. Due to these drawbacks, The preparation of receipts and payment account is not favored except where the activities of the organization, the result of which are to be exhibited, are simple and modest. That involves no carryover from one period to the next, and it has no assets apart from cash balance, and no liabilities were also there. Next, income and expenditure account. So generally we need income and expenditure account. With only receipts and payment account will not serve any the purpose. The receipts and payment account will not serve any purpose. For to calculate the surplus or deficit, we must make income and expenditure account. The income and expenditure account is equivalent to the profit and loss account of the business enterprise. It is an account which is widely adopted by not for profit making concerns and is prepared by the following accrual principle. Only items of revenue nature pertaining to the period of account are included therein. The preparation of the account, therefore, requires adjustment in relevant accounts of outstanding item of income and expenditure, as also exclusion of amounts paid in advance before these are included in income and expenditure account. Insofar as this, it resembles a profit and loss account and serves the same function in respect of not profit making concerns as the later account does for the firm carrying on business or trade. This simply means that the purpose profit and loss account serves for a profit making organization, the income and expenditure account serves the same purpose for a non-profit making organizations, clubs and societies. Non-profit making organization registered under Section 8 of the Companies Act 2013 are required to prepare their income and expenditure account and balance sheet as per Schedule 3 of the Companies Act 2013. Let us learn the features of income and expenditure account. It is a revenue account prepared and at the end of the accounting period for finding out the surplus or deficit of the period. So in this account we don't have profits or loss. We instead of profit we have surplus, and instead of loss we have deficit. Next, it is prepared by matching expenses against revenue of that period concern. Both cash and non-cash items such as depreciation are taken into consideration. All capital expenditures and incomes are excluded. Only current year's income and expenditures are considered. Let us continue. Main sources of income. These are subscriptions, ordinary donations, membership fees, entrance fees. If the amount is normal or provided according to bylaws of the society, recurring grants from local authorities and income from investment, etc. Any amount raised for the special activity, example, on sale of match tickets is deducted from the expenditure of the activity and the net amount is shown in the income and expenditure account. Any receipt of capital nature shall not be shown in the income but will be credited to capital fund or special purpose fund, etc. Example, building fund, or if the receipt is on account of sale of fixed assets, it shall be credited to the asset account. Example, Hospital, medicine and cost of test and investigation. In case of sports club, sports material, tournament expenses. In case of drama club, expenses of staging plays, rent of the hall, payment to the artist, etc. In case of educational societies, awards of scholarship, organization of seminars, etc. In case of library societies, newspaper and magazines. Any expenditure for acquisition of fixed asset will be capitalized through the amount of annual depreciation shall be debited to the revenue expenditure. It may be noted that after various accounts have been adjusted as is considered necessary and all the revenue accounts have been closed off by transfer to the income and expenditure account, there will still be a number of balances left over. These are included in the balance sheet. A balance sheet is thus a complement to such an account. If a regular trial balance is available, the preparation of income and expenditure account and balance sheet is on the lines of final accounts. Let us continue. Distinction between receipts and payment account and income and expenditure account. For not-profit organizations such as public hospital, public educational institutions, clubs, temples, churches, conventionally prepare receipts and payment account and income and expenditure account to show the periodic performance for a particular accounting period. The distinguishing feature, the distinguishing feature of both the accounts can be summarized as receipts and payment account is an elementary form of accounting account consisting of a classified summary of such receipts and payment over a certain period together with cash balances at the beginning and close of the period. The receipts are entered on the left hand side and the payment on the right hand side, that is, same sides as those on which they appear in the cash book. All the receipts and payments, whether of revenue or capital nature, are included in this account. The balances of the account at the end of the period represent the difference between the amount of cash received and paid up. It is always in debit since it is made up of cash in hand and cash at bank. Income and expenditure account resembles a profit and loss account and serves the same function in respect of not for profit making concerns as the last mentioned account does for a firm carrying on business or trade. Income and expenditure account is drawn up in the same form as the profit and loss account. Expenditure of revenue nature is shown on the debit side. Income and gains of revenue nature are shown on the credit side. Income and expenditure account contains all the items of income and expenditure relevant to the period of account, whether received or paid out, as well as that which have fallen due to recovery or payment. Capital receipts, prepayments of income and capital expenditure, prepaid expenses are excluded. It does not start with any opening balances. The closing balance represents the amount by which the income exceeds the expenditure only or vice versa. Preparation of income and expenditure account from receipts and payments account. Situations may require the compilation of income and expenditure account and balance sheet from receipts and payment account. After making adjustments in respect of income accrued but not collected and expenses outstanding, the preparation of balance sheet in such a case is also necessary since an income and expenditure account must always be accompanied by a balance sheet. The procedure which should be followed in this regard is briefly outlined below. First, Compute the opening balance of the accumulated fund or capital fund of the institution with which the help of making opening balance sheet. It will be the excess of total value of the assets over that of the liabilities at the commencement of the period. Next, open ledger accounts in respect of various items of income and expenditure, that is subscription, rent, printing, purchase of sports material, etc., in which accrual or outstanding at the beginning or at the end of the period have to be adjusted. Enter therein any accrual or outstanding at the end of the period, as well as amounts which relate to an earlier period or the following period. The balance of the ledger account, therefore, will represent the amount or income or expenditure pertaining to the period. This should be transferred to the income and expenditure account. Post from the debit of receipts and payment account to the credit of income and expenditure account other items of income wherein accruals and outstanding amount have to be adjusted. Likewise, post item of expenses in which no adjustment is to be made directly to the debit of income and expenditure account. Transfer the balance of income and expenditure to the accumulated fund, that is capital fund account. Post the receipts and payment of capital nature from receipts and payment account to the appropriate asset or liability account for incorporating in the balance sheet. If a part or whole of an asset has been sold, the capital profit and loss, if any, is debited in the income and expenditure account. The balance of income and expenditure account should be transferred to the accumulated fund, that is capital fund account. Prepare a balance sheet by including therein all the balances left over after transfer to incomes and expenditure have been made. Illustration 2. Illustration 2. During 2016, subscription received in cash is 42,000. For 2016, the subscription received in cash is 42,000. This subscription includes 1600 for 2015, that is of previous year, and for 2017 it includes 600. Also, 3000 has still to be received for 2016. This means this is outstanding. Outstanding for 2016. Calculate the amount to be credited to income and expenditure account in respect of subscription. Solution. Amount received 42,000. Add outstanding on 31st December 2016, 3,000. 45,000 less received on account of 2015 and 2017. For 2015 received 1600 and for 2017 received 600. This needs to be deducted because this does not relate to the current year. So minus 2200, 42,800. Subscription for the current year is 42,800. Let us draw subscription outstanding account. Subscription outstanding. Date particulars amount. Date particulars amount. January 1 to balance brought down 1600 by balance carried down 3000. Subscription outstanding 31st December. 31st December by subscription 1600 to subscription account 3000 totaled at 4600. Next is subscription account. Prepare subscription account. Date particulars amount. Date particulars amount. December 31st to subscription outstanding 1600 to subscription received in advance 600. Actual subscription received 42,000 and 3,000 is outstanding subscription by subscription outstanding 45,000 42,800 closing figure December 31 to income and expenditure account subscription. Next is subscription received in advance account. If we have received subscription in advance, it would be treated as a liability. Date particulars amount. Date particulars amount. 31st December by subscription 600, to balance carried down 600, 31st December. On 1st January 2017, by balance brought down 600. Write a note. Subscription outstanding of subscription outstanding 3000, and and subscription received in advance, subscription received in advance rupees 600 will be shown in the balance sheet, will be shown in the balance sheet on the asset and liability side, respectively. Illustration 3. Shift to illustration 3. Suppose salaries paid during 2016 were 23,000. The following further information is available. Salaries unpaid on 31st March 2015 is 1400. Salaries prepaid on 31st March 2015 is 400. Salaries unpaid on 31st March 2016 is 1800, and salaries prepaid on 31st March 2016 is 600. Calculate the amount to be debited to income and expenditure account in respect of salaries and also show the necessary ledger accounts. Calculate the amount to be debited to income and expenditure account in respect of salaries and also show the necessary ledger accounts. Solution. Prepare salaries account. Date, particulars amount, date, particulars amount. Salaries paid is 23,000. 23,000 to cash 31st March Salaries unpaid on 31st March 2015, 1400, and prepaid on 31st March 2015, 400. By salaries outstanding, 1400. April 1, 2015. April 1, 2015 to prepaid salaries, 400. Unpaid salaries on 31st March 2016, 1800, and prepaid salaries on 31st March 2016 is 600. To salaries outstanding, 1800, and by salaries prepaid, on 31st March 2016, 600. 25,200, 25,200 minus 1400 minus 600, 23,200 would be transferred to income and expenditure account. Next account which needs to be prepared is salaries outstanding account, date, particulars, amount, date, particulars, amount. Salaries outstanding April 1, 2015 by balance brought down, 1400. This needs to be transferred to salaries account 1st April 2015, 1400. On closing date March 31st, 2016, to balance carried down 1800. This needs to be transferred to salaries account 1800. March 31st, 2016, 3200, 3200. The next is salaries prepaid account. Salaries prepaid account. First we have written to balance brought down 400. This needs to be transferred to the salaries account. So by salaries account transfer, that is 400. The closing balance is 600. So by balance carried down, we have written 600, and this needs to be transferred to salaries account. So to salaries account 600. So in this way we have prepared salaries prepaid account or prepaid salaries account. I believe you have understood this. Quickly do it. Quickly understand it. Let us continue. The next topic is balance sheet. So we are done with receipts and payments account and income and expenditure account. The next concept is balance sheet. A balance sheet is a statement of assets and liabilities. A balance sheet is a statement of assets and liabilities of an accounting unit at a given date. It is generally prepared at the end of the accounting period after the income and expenditure account has been prepared. It is a classified summary of a ledger balances left over after accounts of all the revenues items have been closed off by transfer to the income and expenditure account. In not-for-profit organizations, the excess of total assets over total liabilities is known as capital fund. The capital fund represent the amount contributed by the members, legacies, special donations, entrance fees, and accumulated surplus over the years. If, however, members have not contributed any amount, the name should be accumulated fund. The surplus or deficit, if any, on the year's working as disclosed by the income and expenditure account is shown either as a addition or to the deduction of capital or accumulated fund brought forward from these period. Accounting treatment of some of the special items of balance sheet. Donations. Donations may have been raised either for meeting some revenue or capital expenditure. Those intended for the first mentioned purpose are credited directly to the income and expenditure account, but others, if the donation have declared their specific intention, that is, their specific donation, special donation, are credited to the special fund account and, on the absence thereof, the capital fund account. If any investment are purchased out of the special fund or an asset is required therefrom, these are disclosed separately. Any income received from such investments or donation collected for a special purpose are credited to an account indicating that the purpose and the corresponding expenditure account is carrying out the purpose of fund is debited in this account. On no account any such expenses is charged to the income and expenditure account. The term fund is strictly applicable to the amounts collected for the special purpose where these were invested. Example, scholarship fund, prize fund, etc. In other cases, when the amounts collected are not invested in securities or assets distinguishable from those belonging to the institution, the word account is more appropriate. Example, building account, tournament account, etc. Instead of paying cash, a donor may sometimes give away, transfer a security or some other readily realizable assets. In such a case, the value of such assets or valuation must be credited to the fund for which the amounts has been donated. Next is entrance and admission fees. Such fees which are payable by the member or admission to club or society are normally considered capital receipts and credited to capital fund. This is because these do not give rise to any special obligation towards the member who is entitled to same privileges, or others who have paid only their annual subscriptions. Nevertheless, where the amount is small, meant to cover expenses concerning admission, or the rules of the society provided that such fees should be treated as income of the society, these amounts may be included in the income and expenditure account. The treatment depends upon the requirement of question. If the question is silent, then always take it to the capital receipt. Entrance and admission fees. Next is subscription. Subscription, being an income, should be allocated over the period of their accrual. For testing the knowledge of candidates of this important accounting principle, questions are often set in examination wherein figures of subscription collected by the society during the year, as well as those outstanding in the beginning of the year and its close, are given. If some subscription have been received in advance where their income is also there, amount is also indicated. In such a case, it is always desirable to set up a subscription account for determining the amount of subscription pertaining to the period or for which the accounts are being prepared. Example: if it is stated that subscription collected by a society during 2015 amounted to 1850, out of which 200 represent subscription for the year 2014, that is previous year, and 100 were subscription collected in advance for 2016. So 2000 for 2015 advance collected is 200, and for 2016 advance collected is 100, and for previous year amount collected is 200. The subscription amounted to 500 were outstanding at the end of the year, that is on 2015. The adjusting journal entry and the subscription account should be set up as follows. Subscription outstanding account 500 to subscription account 500. In subscription account, to subscription outstanding to subscription received in advance, that is 100. So 200 and 100, that is 300. Let's see the subscription account. During the year we have received 1850. Out of 1850, 200 is outstanding subscription. To subscription received in advance is 100, and the closing subscription is 500, that is outstanding. So transfer to income and expenditure account is 2050. Let us see how it is calculated. The subscription during the year is 1850. That is of 2015. We have received 1850. For 2015, the outstanding amount were 500. So plus outstanding for 2015, 500. So this would be 1850 plus 500 equals 2350. We have received for 2014 and 2016 also. For 2014 it is 200, for 2016 it is 100. It is 200 and 100. This does not relate to current year, that is 2015, so needs to be deducted. So minus 300 will lead to 2050. So in this way we have calculated this 2050. 1850 we have received. Outstanding at the end of the year is 500, so 2350. Out of this, 200 relates to 2014 and 100 relates to 2016. So income and expenditure account 2050. The amount of outstanding subscription is adjusted in the subscription account by debit to the outstanding subscription account, and to the balance is shown as an asset in the balance sheet. The subscription account is closed off by transferring its balance at the end of the year to the income and expenditure account. Let us continue. Life membership fee. Life membership fee. Fee received for life membership is a capital receipt, as it is a non-recurring in nature. It is directly added to the capital fund or general fund. For adjusting lump sum subscription collected from the life membership, one of the following methods can be adopted. First, the entire amount may be carried forward in a special account until the member dies, when the same may be transferred to the credit of accumulated fund. Next, an amount equal to the normal account subscription may be transferred every year to the income and expenditure account and the balance carried forward till it is exhausted. If, however, the member dies before the whole of the amount paid to him has been transferred in this way, the balance should be transferred to the accumulated fund on the date of his death. Next, an amount calculated according to the age or average life of the member may annually be transferred to the credit of income and expenditure account. Other concepts. Treatment of important items in not-for-profit organization. First is donation. It is gift in cash or kind for some person. It may be of two types. First, special donation and then general donation. It is specific donation. It is received for a specific certain purpose like building donation, library books donation, etc. It should be capitalized and shown on the liability side of the balance sheet. General donation, it is not received for any specific purpose and shown on the credit side of income and expenditure account. Next is entrance fees. It may also be known as admission fees. It should be capitalized. So entrance fees should be capitalized and added to the capital fund for all the organization, because this is non-recurring in nature. If the question gives any specific treatment of entrance fees, then it should be followed accordingly. What is legacy? It is an amount received by an organization as per the will of a person after the death of the person. It should be capitalized and shown on the liability side of the balance sheet by adding to the capital fund. The next is life membership fee. It should be capitalized and shown on the liability side of the balance sheet. If it in the question gives any specific treatment of life membership fee, then that treatment would be followed accordingly. Let us continue. Endowment fund donation. It is a donation received and only income from that donation is to be used for certain specific purpose. In such cases, income relating to special funds should be added to these funds on the liability side of the balance sheet. All the expenses should be deducted from that fund on the liability side of the balance sheet. Next, treatment of sale of old newspaper and periodicals. The amount received on such sale is shown as income and the credit side of income and expenditure account. Sale of old fixed assets. The sale proceeds of old fixed assets are treated as capital receipts. The profit or loss of sale of fixed assets is shown in the income and expenditure account. Honorarium. It is paid to someone for receiving any services from person who are not the employee for the not-for-profit organization. Preparation of balance sheet. Preparation of opening balance sheet and calculation of surplus. If capital fund or accumulated surplus in the beginning of the year is not given, it is calculated by deducting liabilities from assets in the beginning of the year. While calculating the opening capital fund, care should be taken to include the prepaid expenses and accrued income as assets and outstanding expenses, and advances income as liabilities. Any surplus earned during the year is added to the opening capital fund, and deficits suffered should be deducted from the opening capital fund. Cash and bank balance. Closing cash and bank balance is disclosed in the receipts and payment account and is shown in the asset side of the balance sheet. If there is a bank overdraft, it should be shown as liability in the balance sheet. Fixed assets. Opening balances of fixed assets like furniture, building, equipment, etc. are increased by the amount of purchases and reduced by the amount of sales, and depreciation is charged on the same. Liabilities. Opening balances of liabilities should be adjusted for any increase and decrease in the same. There is a note given. The illustrations explained in this chapter comprise of clubs not registered under the Companies Act 2013. Therefore, income and expenditure account and balance sheet are not prepared as per Schedule 3 of the Indian Companies Act 2013. I believe you understood. Let us move ahead. Example. Write example. The receipts and payments for the cricket club for the year ended 31st December were entrance fee rupee 3000, membership fee rupee 30,000, donation for club pavilion rupee 1 lakh, food stuff sale rupee 12,000, salaries and wages rupee 12,000, purchase of food stuff rupee 8,000, construction of club pavilion rupee 1,10,000, general expenses rupee 6,000, rent and taxes rupee 4,000. Bank charges rupee 1,600. Cash in hand rupee 3,500 on 1st January 2000, and cash in hand rupee cash in hand rupee 2,000 on 1st January 2000, and cash in hand rupee 3,500 on 31st December 2000. Cash at bank rupee 4,000 on 1st January 2000, and cash at bank rupee 5,900 on 31st December 2000. We need to prepare receipts and payments account of the cricket club. Solution. Receipts and payment account of the cricket club for the year ended 31st December. Receipts amount, payments amount. We'll begin with the opening balances of cash. To balance brought down, cash in hand 2,000, cash at bank 4,000. To entrance fees, to entrance fees 3,000, to membership fee 30,000, to donation received for pavilion Donation received for Club Pavilion 1 lakh. To sale of food stuff 12,000. By salaries and wages 12,000. By purchase of food stuff 8,000. By Club Pavilion construction 1,10,000. By general expenses 6,000. By rent and taxes 4,000. By bank charges 1,600. By balances carried down cash in hand, cash at bank 3,500 and 5,900. Receipts and payment account totaled at 1,51,000. 1,51,000. I believe you understood. I believe you understood this. Let us quickly see what we have done in today's class. Let us quickly see what we have done in today's class. So we have understood in not-for-profit organization, this is basically known as Section 8 companies as per the Indian Companies Act 2013. We prepare receipts and payments account instead of cash account over here, but receipts and payment account is equivalent to cash account. We also prepare income and expenditure account instead of profit and loss account, but that is equivalent to profit and loss account. And we prepare balance sheet, that is statement of financial position. Generally, a NPO, a not-for-profit organization, earns by several sources like donation, entrance fees, admission fees, subscription, life membership fee, etc. We have understood the nature of receipts and payments account. What kind of receipts? It could be a capital receipt, it could be a revenue receipt. Both are entered into the receipts and payment account. We have done an illustration on the basis of receipts and payment account. We have prepared Swaraj Club receipts and payment account. Then we shifted to the main sources of income. Distinction between the receipts and payment account and income and expenditure account. Done an illustration in relation to income and expenditure account. We have learnt about the balance sheet, the accounting treatment of balance sheet, and several items which we show in balance sheet, like donation, entry fees, the membership fees, and etc. And at last, we have seen this example. We are keeping it till here. We are stopping here. Thank you. Thank you.